Hey, what's up, guys? Mike here with Invest Theory, and I'm going to continue on my series of looking at a technical indicator and talking about how it can be used um, using TradingView.com. So today I wanted to talk about the Williams percent R momentum indicator. Now, this indicator was created by Larry Williams, the same guy who did the Ultimate Oscillator, and it's very similar to the Money Flow Index in that it looks for overbought and oversold areas. So when the Williams percent R is between 0 to a negative 20, the stock is found to be overbought. And when the Williams percent R is between negative 80 and negative 100, the stock is essentially oversold. Um, so uh, it looks at the same time period as MFI, which is 14 periods. So let's take a look at how we can add that. On TradingView.com, if you've never done this before, you'll look at the ticker. Right now I'm looking at ConocoPhillips, and we're going to go down here to the strategy tester, indicators and strategies. We're going to scroll all the way down to the Williams percent R. Now, this guy Larry Williams had created a lot of indicators for traders to use, and I'm excited to check those out as well. So if you're trading MFI with me, then you'll know this looks very, very similar to that. We can see right up here in these levels that this is, the stock is performing well. Right when it crosses the negative 20, we start to see some good put opportunities. Now, I'm looking at COP at a 15-minute because this would be a day trade opportunity here, right? So let's just play out this period on this chart and see what the Williams percent R could do for us. So right here at the beginning, this we know that right when the price gets up here, that we're in some oversold areas. Now, to me, I wouldn't want to buy this. I want to wait until we're crossing into this area one way or another, from up here or down here. So in this instance, we would take a put right here. Taking a put right here is perfect. Look at that. We buy on this green candle at around 68, 67, 66, 68, 66. And then we have this nice long bearish candle all the way down to about 68.40. And that's one 15-minute candle. So as you know, on an option play, that would look pretty nice. We would already probably be at 5%. Now we're going to continue that on though, all the way down to right here. At this candle, we're looking at a price of about 68.40 still, 68.39. We want to hold this stock until it crosses this line again. So we're going to want to hold it to right here, because if we've got a put and we're holding it already, we want to play this out. Now, some people, will exit in this area, and that's fine because you're making some really solid gains. Now the stock is going to be down about $1. This would have been a perfect overnight. So this would have been the end of the day trade, swinging into the next day. And as you can see, this thing opens up 67.32 from 68.67. So really good swing trade. We would exit right here on this right here on this candle at some point. And then we would not buy this until about right here. Now, when we buy right here, we're going to take a call as the stock is coming out of oversold levels. And as you can see, we kind of have a little fake out right here. And we're going to hold this one for probably the rest of the day, but it's still a good day trade. Now, we would have gotten in right here on this candle, somewhere in the 67.20 range on the high. The low would have been about 67, and we would get out right here on this candle, 67.45 on the high, 67.32, because right after that, the next candle dips right back down. So not a huge amount of gains. I mean, on an option, again, looking at 5% or more. let's take it over here. We're going to take a put right here. So again, we're going to be taking a put on this candle somewhere. Let's just be generous with this and go 68.50, or even we'll do the low 68.48. We are going to take it to right here. So, which is actually the lowest candle. This candle would have broke. We would have sold about right here at 67.80. So that is definitely not bad. That is about $1. So for our option, we would be up a considerable amount. This would be a good place to take a long, right? So we're going to take a call, and look at this. Into the market, opens up, boom. It's a good amount of profit right there for a swing trade. We'll take a put right here, 68, about 68.81, which is 67.66. Vice versa, we're going to do the put right here, and etc. And that's how you use the Williams percent R. As you can see, you can just follow this along on the chart. I highly encourage you to go out and check any stock that you want to trade. The oversold and overbought indicators are very crucial because it tells us, what the momentum and what the feeling of the stock is in the market. And again, this was the Williams percent R. If you are looking to trade with us, feel free to join our free Discord room, like us on Facebook, and subscribe to our YouTube videos. This is Mike with Invest Theory. Have a great day.